Welcome back, ladies and gentlemen, to the All in Crypto Show. I am your host, All in Crypto, and today I am absolutely delighted to be joined by someone who I have a true admiration for, Mr. Francis Hunt. He goes by the Market Sniper, the Crypto Sniper, and of course, the Reset Sniper on the show today to talk to us about his views on the market. Welcome on board, Francis. It's a pleasure to have you.
Delighted to be back with you. Thank you for asking me.
Yeah, and I want to just touch on the point that I made about having admiration for the individual that we've got on today. Francis is someone that I've been following for a hell of a long time. Somebody that really helped me understand the importance of being able to technically analyze a market, not only understand the importance, but actually practically do it and see it play out moving forwards. I mean, Francis, you've made some unbelievable calls. You were one of the only people calling short on WTI oil, and you've made many, many more this year alone, like Bitcoin to 42K, and too many to mention. So it is a real pleasure to have you back on. I know you're a familiar face and excited to dive into everything that we're going to get into. And if we could perhaps start off on the crypto markets, perhaps with Bitcoin, and we can get maybe your assessment of where we're at and what you think might be to come moving forwards.
Oh, a good place to start. As you know, we refer to it as the God market of crypto. We'll have a look at a few other God markets that do have an effect in due course, I'm sure. So this is my Bitcoin chart. These are my current scribbles. I actually have a ton of Bitcoin charts with different scribbles on them because I don't like them to get too convoluted. But here's where my take is. By the way, overall, my assessment is that it's broadly positive. People like the long answer, they like the short answer, they like the in-between answer. So, the short answer is broadly positive. So what typically happens, thank you for the kind words, by the way. It's very generous of you to do that. We don't get everything right. And we did waver a bit on Bitcoin at one point, it must be said. But overall, we've been behaving in a bull. We felt it was largely a bull. I'll cover the bit where we wavered tiny bit. And there was mitigation for that. But essentially, our primary view has been that this is a inverted head and shoulder construct that is going to come to an end with a target performance. And let's actually go to the 3-day rather. That's getting a bit tight in there. And the point I like to make that many people, I don't actually overwatch too many other crypto channels. I have peace of mind on my own level. I don't feel like I'm competing. I'll never match some of the people's numbers because I say things that are a little bit not appreciated. And I don't care if I'm not the biggest channel. I'd rather have some of the best followers and go on quality than pure volume. But there's a couple of things with regards to your question on Bitcoin that really warrants saying that I always tend to feel I've never heard anyone else say. So what do I do or say that's unique, given that there are quite a few technical commentators that do give opinions on Bitcoin? Well, I've yet to see anyone draw this particular head and shoulder. And I regularly remind, now this one's kind of tricky because that was a flag, but it qualifies as a shoulder. If we drop the time frame, I'm, by the way, on a rather eclectic time frame. That's something else I do. I want the pattern view for the most relevant piece of price behavior that I want. And I'm not afraid to use 12 hours, 8 hours, 3 days. These are things you don't typically hear. People think there's a right chart. It's a daily chart. Or it's a 4-hour. Days are decided because people decided 24 hours in a day and 7 days in a week. This is actually quite random. In fact, I'll often say we have a decimal system because we have 10 fingers. But in actual fact, 12 would have been a far better number. You can halve 12. You can halve, actually 8. 8 and 12 would have been better systems. I mean, 8 you can halve and you don't get to the second halving and you're already at a decimal number. So, 10 is 5 and then 2.5. 8 is 4. And then it's 2, and then it's 1. It's pretty damn good. You could use 9. It's 3 by 3. It's quite Masonic. There's lots of things that could have been. So because of counting on fingers, we have a decimal system. Somewhere because of moon rotations and perceived astronomy, you have a number of days, and then it's imperfectly done in a month. So you must understand your reasons for why we do something. I'm interested in the slowing down of Bitcoin in its bull phase and its roll into the bear and its roll into the next bull. And it just so happens for the candles still to be evident for me, it happens to be 3 days that works. But that was the final bull head and shoulders. And there actually was, as I've mentioned before on my own channel, and I mentioned on yours, a complex head and shoulder structure that went across like that over there that actually gave you your first really significant pullback. So it's important to remember, before making the 69K high, you made a 64K and you then traded 29. We did call that. And that was something that made targets on wicks. And we then also said the falling wedge will eventually break to the upside when everyone had pivoted bearish. Don't forget, by the time you've gone to 64 and you've then traded 29, that's more than a 50% retrace already. So those are two head and shoulders, call them one. And I tend to say Greek too because I'm using the straight lines. But the interesting thing about the second one was the target literally pinged the bottom.
And I don't want to interrupt your flow there, but if you look at what we've what you've drawn here, these are traditional technical patterns, and some people might write them off because of their kind of traditional, they've been around for a while, but you only have to look at the proof in the pudding to see that these patterns play out perfectly to target before often you get some sort of a pivotal move against it, and this is one reason why I think you're amazing at what you do for many reasons. One is because you think outside the box. I loved your comment there on, the kind of why we use 24 hours and stuff like that. And two, because the stuff that you show performs consistently, and it's through identifying things like what you're identifying now. So please do continue. I just had to say that.
Yeah, thank you again. And come on in anytime. Otherwise, I end up monologuing too long, and it also has to stay on point. But what we highlight is essentially you've got a triggering event when you broke. It also was a broadening structure. So the other thing that's quite important that doesn't get potentially mentioned is that we overlay multiple pattern varieties over the same price behavior that give further confirmation. So instead of putting your bet on one single pattern, you actually get overlays, and our theory is self-supportive. So you have another framing that actually confirms an event. I mean, the reason I say that is a broadening structure. It's an ascending broadening structure. I had to chuckle when someone with a massive YouTube channel started copying the same language and didn't understand the theory and was making what turned out not to be an accurate call for the wrong reasons, but was referring to ascending broadening structures, which is language you only hear from us. So he's probably been watching or picking it up. But that ascending broadening structure breaking up out of that falling wedge, that was the target of the head and shoulder. So we're following at a pattern basis the actual pump and groove of Bitcoin. Invariably, it was a bearish signal because you're getting increased volatility. So change color because I've now used blue as well and fattened it up a little bit. You were getting increased volatility even though you were going higher. And that is what gives you the broadening structure. Then you bounce. So we broke both the neckline and this broadening structure basically at the same place. You had two separate pattern framing reasons to be of the view that things were going to be kind of bearish. Now, the interesting part about both these head and shoulders are they are current levels and lines of great significance. I did the one dashed, which was the neckline for the second head and shoulder, this one. Now, this broadening structure actually got you in earlier up top here. This is the neckline. That was the actual break. And you then went into this big flag and then sold off. So if you left it late and you got short there, you actually would have been in the red for a while, here, and there, on the dashed neckline, which is the neckline that belongs to the two here, just as a reminder.
Yep.
The higher neckline actually was with the first head and shoulder, which was a smaller one. And it was a smaller one that just took you to the 29. So why are we talking about history when the question is what's Bitcoin going to do today? Because in technical analysis, the key levels of significance that were shown, particularly when you get performing patterns, which both these head and shoulders were and are become exceptionally relevant, again, when you are returning back up after basing here at the 16,299 levels, which is exactly what happened after all the dramas that we all heard about, the rinsing we all got on FTX, etc., etc., etc. So those values are the 47.5 that came from that head and shoulder. And we refer to armpits. So we have our own theory in fullness about head and shoulders, which details exactly what we feel is technically significant. So no one else on a traditional technical analysis program, as a who follows Peter Brunt or someone else, would have drawn that neckline that we had. And I assert that it's the correct one. And you actually had the tops of the following shoulders interact with that level very interestingly. And even that flag, it split the flag through the two corners, that neckline. So that is the 47.5. And then the level where we are convoluted now is the second head and shoulder, and it is the 42.5, which was our actual call we expected to be run. So the target this is on Binance, was 40,488. That came from the reversal head and shoulders there. There's the two shoulders, and that was your head. So the tail of Bitcoin that nobody talks about, and this is a phrase I find we're the only ones using, is that it is literally a bookmarked bear market that was bookended by two head and shoulders. In other words, commencement, a macro head and shoulders. I'm referring to the second one that was your 69K high. So you literally in the pattern have your all-time high on Bitcoin, and it made up part of a major breakdown to the target we gave of 16,290 that saw you trade 15.5. And then as part of that low, in the perfectly symmetrical way, so you earmarked the high at 69 over here. That is your, Everest, if you want. And this is your Mariana Trench, if I'm to stick with the analogies correctly, as you want. And they were both the apex points of reversal head and shoulders. And in this case, obviously, it's an inverted head and shoulder, as you are with an upside reversal. And that is why we've biased bull. And that's why we said the 40.5 would have a target. And given the neckline of the original bookmark south, this one over here, our second downside head and shoulder, our first inverted, given the significance of it and the fact that it performed brilliantly to target, making it a super significant pattern at every level, we expected you to run through the target of 40.5 and to make 42.5. So most of the time, bar our loss of confidence moment, which I'll come and confess to in a minute, throughout this inverted head and shoulder, we were saying, stick with the course. It's going 42.5. It should run 40.5 and very likely to have sufficient momentum in a melt-up fashion to break the 42.5. Now, that is exactly where we are. And then the question to answer, which is your original question, but this is the backstory too, is, so what next? Why are we doing what we're doing now? What's going on? We're not going any higher. The bulls are getting impatient. They're getting afraid. Some are calling it a bear now, reversal back down. And our overall scenario is always continuation expectation. So only when you have a clear-cut reversal pattern do you start to talk reversal. Otherwise, you expect continuation. Now, you can get pullbacks along the way, certainly, but that doesn't mean the macro trend, the run from 15.5 to 47, 42.5, my apologies, and slightly beyond, because we did 44s and some change, is over. So the bias is we remain bullish, and we've said we think you're going to get a bit of a Santa run on our last crypto. So Santa, you get a Santa equity run sometimes, and it runs a bit into January. So it's the whole period, essentially 15th December, middle of December, which we're already into now, into 15th of January, the month of it. So it's a Santa rally. It covers the Christmas and the Happy Days, New Year, a week of people back at their desks, buying the market long after they got defensive and closed their positions to get their bonuses, et cetera, institutional habits and cycles. So that remains our default position. And we don't see too much reason to move away from that. But why you're not going up then? We have a look. Well, what does our theory in HVF method dictate? You'll know this as a member of the community, and as ever, I'm delighted to have you and love watching your success in the space as well. So congratulations for all the moves you've made this year in both your Twitter and your YouTube progress.
Thank you very much.
The progress decay is the next thing. So what basically does progress decay mean? Well, it's a phrase I've had to come up with myself, so that's maybe why it's a bit toothy. But in options trading, you get time decay. So when your underlying market, you bought call options on Apple and Apple is not going up, but you only have 6 months and a month passes by and Apple's at the same price, that option is losing time value. Because it's not, the intrinsic has not gone up, and the amount of time you have left for it to go up further, if you're in the money or you're not yet in the money, is reducing. So when you're not progressing, you're actually slipping. There's no point of stationariness. And this is true in life, grease monkey on a pole. If you're not climbing, you're going backwards. You're never just at that perfect point where you're doing absolutely nothing. You're falling. If you think you're doing nothing, you're probably falling. So you've got to be hustling, otherwise you're falling. And it's the same for price behavior. So progress decay is, okay, you did the 42. Now you might say, but what about your 47.5? Why didn't it go there? Because there was also significant head and shoulders. You cared enough to tell us about the first one with the higher neckline, and it also performed. It wasn't as big. And 5K, another 5K on 42.5 is a lot further. The original pattern target, remember this, you just got the bottom of the pattern target. You didn't go much below. At 16,260, you didn't go much below. It literally is a matter of hundreds. You were correct to under $1,000 on Bitcoin's bottom with that head and shoulder call. So it's quite, targets are targets for a reason, because generally they're a good place to get out. But you don't stop on the line. You get usually a little bit of, and you'll note, blow off momentum to take you through. Now I'm going to drop the time frame so we can just focus on the current, but I needed everyone who maybe hasn't been on the Crypto Sniper YouTube channel for some of the updates we do there, to just get the backstory sufficiently so that they could understand why we are making the case we're making for where we are right now. So if I just pull this through a little bit and we have a look at where we are now, you'll notice that we pointed out, in fact, let's stay with the overlay draw and our transgender pink here. So you got a bit choppy, and a number of people who were talking about ascending megaphones and weren't too sure of what they were talking about, were expecting actually it to sell off here, because the volatility did actually increase. But what you were getting was, you also had the Binance settlement and fundamental news, which actually long run I saw as positive, because it kind of ended the argument. They set their price. They were going to kill him and his company, and now they just decided they'll ransom him. It is progress. He gets to live. He gets tarnished. He takes a whole bunch of billions and buggers off. Someone else runs it, from maybe the World Economic Forum, for example.
I believe he was from the World Economic Forum. Yeah.
This is the mercantilist way. They capture you for crossing their lands in the many periods in the Middle East. They steal your goods, they lock you up, and they tell you they're going to kill you until someone shows up who will pay a lot of money, and you might be lucky. They half stick to their price as they get the money, and you get to break and run for it. But what we expected while this was happening is that you were going to get a type 3 rising wedge, which is a definition that only means something to people who understand our theory, but that's when a rising wedge, which should by traditional technical analysis break down, actually does the exact opposite, and you get the final blow off. Because we were hovering in a staging position just short of our target, and what happens, and this is what gave me further confidence that we'll do the 42.5, is that the final move is often blow off with many things. So you had a mini blow off. You first had a constriction squeeze. We are the volatility constriction guys. That's what Hunt volatility funnel means. We trade in environments where the price behavior is correcting. Why? Because that's when you get a short amount of risk and a highly expansive amount of rewards. That's lots of R's with little R risk. That is real alpha. And it shouldn't be all the time. If you're always in the market, you'll probably lose. Most opportunities are not worth the squeeze. The juice isn't worth the squeeze. You've got to be selective. That's what sniper is. That's why we're the market snipers, the crypto snipers, and even the reset snipers. So this is sniping for a blow off, and you get the overshoot performance that runs the 42.5. Now, if the target's 40.5, you don't, unless you have a major reason for moon, which probably require a fundamental event or collapse in the dollar, get an additional 5K. As you saw on the downside target, you literally were under 1,000, you're a couple of hundred short. You don't tend to get a 5K. So it was within the realms to say there was a plausible likelihood that you could get. Now, had you sold at 42.5, you could still be buying it back right now at 41.9 a whole bunch of time later. And remember, if you were on margin, that would have cost you to hold. So if you'd sold at 42.5, you would have watched it go to 44 and some change, and you then would have watched it get slammed here. And now you've been dovetailing around that 42.5. So let's drop the time frame again.
And actually also supporting on the inverse head and shoulders. This is one thing that really clicks with me, is when you see these levels of significance, when you see the charts interact with them in the way that they do, there's simply no denying that technical analysis works. You can't, anybody...
The right technical analysis works.
Of course.
I see a lot of shoddy technical analysis on the internet. But you're absolutely right. And the next point I was going to make is, here's your 42.5, and there's your World Economic Forum locust burger that you're all going to have to eat, patty in there. And here's your bun. And you can see the two equal halves above and below. And there's your burger. It almost is the epitome of a diagram of your burger. And where have I drawn it? The low part, your bread roll, is on the plate of the target of 40.8, 40.48, sorry. So that's roughly, call it 40.5. So we stop fiddling with small numbers. So you're $2,000 shy on the downside of the key level that we've suggested will be run. And you basically run $2,000 to the same degree to the upside. I mean, if I freestyle this is so typical of a range trading box in the initial instance. It does always pivot into something new. It doesn't stay the same way, but you can see this. Up, 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 down, 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 down. So you're literally in the 2K upper box and by the same measurement back down. That's how far it's built. Both there, but it got supported and supported. So that's plus 2K on your key level of significance, and that's minus 2K. Then what starts to happen is you tighten up a little bit more and you start to set up new patterns. So you went down to the 2K. You've not gone all the way up to the other side, but not yet, but you are actually forming new structure. So we're starting to get new patterns coming out of this. So this is why you got a blow off. You can also see it was squeezing up to the 42.5 when it hadn't yet done the 42.5. It had done the target, squeezed up to this level, it touched it, and then it smashed that. And then how does it come back down below it? It smashes it. It's like a king's crown, this, literally, in doing it.
Yep.
It literally is a box up, a vertical side up, above the 40, and a vertical side down. And then you get much the same on the upside down way. What's the structure now in terms of what it's throwing down? So this is what we do. Is the key level of significance showing to be significant? In my world, using my form of technical analysis, absolutely. Does any other crypto guy on any channel, and I don't know because I don't watch enough of them. Occasionally I will see a few segments, and if they don't grab me quickly, I'm too bored and I haven't got enough time to watch videos, even as long as my own sometime. So, if they're not grabbing me and I don't see anything that I'm going to learn new, I can't even watch them. But does anyone else talking about 42.5 as a key level of significance or as a major line level? I don't know. I don't think so. I don't get that impression. Has anyone else drawn that head and shoulder that created that line? And do they even know that it called the bottom of crypto? And do they actually even know that you bookended between a major head and shoulder that's peak was 69 and a reversal whose low was 15.5? I don't see anybody saying that, but I'm not really looking to see if anyone's saying that.
No, across the board, I've not seen anybody I think people have been moving higher, but there's nobody with as much. And this is what always attracted me to your channel, and then eventually becoming a member. There's nobody with precision, like the sniper. There's nobody that has got targets that gets stuck to with pretty much perfection. I mean, I don't think there's any other way to call it. Of course, you overshoot slightly, but if you look at where you'll come back and consolidate, I've not seen or come across anybody in the 6 or 7 years that I've been in the markets fully that has as much precision as yourself. And we're seeing it, we're going through the history and we're reliving it.
Well, it's very kind of you to say. I mean, as I keep reiterating, we get plenty wrong. But after the oil call, I was deluded. I actually started to feel disappointed in the rest of the world, because I don't even think I'm the best macro technical analyst. I just felt that it feels like I'm the only one.
Yes.
We're all the best if you're the only one. If you're the only guy that's really doing something in a manner that represents doing it properly, then you're going to appear good to all the rest. I mean, if you're the only person that's doing pottery, everyone's going to buy pots from you. That doesn't mean you're even particularly a talented pottery guy. You're just the only pottery guy. And that's how it felt with the oil crash that you've mentioned, that we were short WTI, cruise liners and various other things. And I became disappointed in the general world community of technicians. They just weren't there. They weren't at the races. They weren't calling it. And we've got the video showing in August.
And that's honestly what 19. I feel is you don't have, I've done all sorts of technical analysis all the way down to 3-minute scalping, which was like, really flaring up my ADHD and everything else. I think that technical analysis, and I'm sure there are some out there, perhaps just hasn't come across them. I feel like it's not done in this manner anywhere. Like, I genuinely do believe that, that it's not just, I'm not just saying that because, me and you are friends and we've known each other for a while. If you look at the proof, and the proof's always in the pudding for me, when you see people talking about trading and stuff like this, it's generally as fake as any other industry, like the fitness industry. These guys are telling you how to get great bodies, 100%. But they're jacked up, If you look at what you've called, even in the past couple of years, let alone a career of this, it's undeniable, it's very encouraging to see. And this is why we're always so excited to have you on the show, is because this is it, guys. If you want to be converted into a technical analyzer, this is your man right here.
Well, there's so much bad technical analysis. I think they destroy the industry. There's so many people that goes, that stuff doesn't work. And they'll say that with validation because they've run into people that said XYZ should do this and this, countless times been inaccurate, and never been able to show why the natural geometry of the patterns are actually tipping their hand in many ways to where lows are likely to be and where highs will be. It's not an exact science to a dollar. Nothing ever is, because there's individual people panicking at any moment, or things and events that can occur at any given moment in time. But generally, there's a natural geometry to markets because the same people are participating pretty much with the same amount of pot size and tools. And when somebody is screwing up a lot, his money gets rolled away from him and given to somebody else. That's all that happens. So you just get a different name to that energy that's finding its way into the market. It's a big voting machine with lots of different sized hands in it, and the big hands have more power. And that's pretty much the political system as well, as far as I'm concerned. But anyway, back to this, and thank you again for lots of
and do you also feel a little bit like there might be a bit of an overlap with, just as a quick side note, finance and politics? They seem very much in tune, in my opinion. They married together, I think.
Yes, definitely. Very definitely at the hip. The one funds the other, and the other answers to the one. It's that simple. And in actual fact, that we didn't cover out of point. If people are telling me where I'll be right, I like to add one place where we were wrong for a while, because you have to bring balance back, just so that people don't lay claim to some sort of superhuman talent. This period where we were really soft was a period that the dollar was rather strong. And we were concerned that there could have been the original head and shoulders could have been stopped in its tracks. And we were watching this and saying, it's a possibility. We didn't say it had to happen, but there was a real threat. And one of the things that concerned us is we had to get to this line, and we had a time if I put that time stop, you might remember, Rupert, it was I think it was around about now.
Yeah, it's just about made it.
December. And it made target just on time. So not only do we have real levels that must be made, we have a time stop that is generated through the natural geometry. So not only vertical targets, time targets. So there's two scales on a chart, remember? It's duration, it's time, it's days, it's months, it's years. And there is price. And we do the geometry in both directions. And if something is lagging in price progress, we start to become concerned. That doesn't mean it's failed. It's only failed when it's failed to make the target in the time, and it finally made it. But at one point, it was down here and down there, and 60% of the time was, and 80% of the time was done. The time started here as it triggered. So, you know, you had that box of non-progress, and you're still only about 10% of your journey. And I remember saying in a community update, it's not looking good. We should bear in mind there's distinct likelihood of, or possibility, stroke probability of pattern failure, unless we get a sudden and violent movement in Bitcoin pretty soon to take it up, because it only has until then, and it's only done 10% with about 80% of its time. And literally within days of doing that, we got the ETF story, the analysis, it shot up to our legacy target of 34, by the way. This is something we didn't discuss as well. It's the rate of climb. It went super strong to the upside. And then as it got a previous key level of significance, it just started the grind. You often see this inflection point on rate of change. So it was accelerating exceedingly quickly, and then it went into a very, very nervy grind, and most people were bearish because it wasn't going up. And then it got choppy, volatile grind. And that was actually essentially a pullback that went up. Now, pullbacks don't go up, obviously, but I'm being facetious. You have your surge, you have your rest, and then you have your surge. So much was the rest that it actually was being nibbled along the bottom. The smart money was nibbling it along the bottom, and then it blew up again. And that's your second leg out of what was, in fact, an upward orientated continuation pattern, which you needed to understand type 3 rising wedges to actually have got into. So now you're in a progress decay period. Again, reverting, we're spending quite a bit of time on this, but people, I'm sure Bitcoin is important to many people, because even if they're not in Bitcoin, they understand its significance to the rest of crypto. So time to drop into a lower time frame. And essentially, you've got a pretty hard support that's set up over here. I call it soft floor and hard floor. So I should actually use a box for that. I tend to use a box, and it's all around our target of 40.5. So a box there, soft floor and hard floor. The soft floor you've kind of broken into and been repelled from. So it's kind of like the spongy floor. It's like 40,000 to 41,000, or 40.1 to 49. So every time you've come into it, you've been repelled. So far, by the way, that doesn't mean forever. If we have some really negative news or something else come, or the dollar gets super strong, this was a lot lower volatility. You got a real hammer in here, which is again a sign of being bought up. When you understand that you're in a range, you know, like a burger range, I did it with the patty, with a 42.5 as the patty, but now you can have the bread roll. That's kind of your resistance area. Now, you didn't go as much over later your 42.5 as you did the original time. So that original surge was your best surge. So there has been a bit of compression across the tops, but we're holding the floor. We're holding the floor. So it's kind of a ledge right now, and we expect progress decay. So you must avoid saying if it's not going up, it's definitely going down. There is an in-between state when something rests that can be the construction of further continuation before you turn too quickly into reversal mentality. And it may need some degree of winding up to make the next 5,000 to 47.5. Well, it'll be more than 5,000 if it dips back into the 40.5 zone. So for me, I think this is going to be a bit of a frustrating pre-bullishness range trading spell, where you've got a fairly defined, well-defined soft floor at the 41 and a hard floor at the 40, with the 40.5 running through it as your key level of significance. and you've had it only really once tested. I say once, it was there and then it was there again before you gave into a grind line, which you'll know what that means. Trying to squeeze higher. You had a super low volatility period there, Fractal, before that spiller and absolute thriller. And we were worried about that a little bit. And then it was Monday. I remember it was a Monday. I think it was now a week ago Monday. We're already getting into this week. So it's now 8 or 9 days away. So I wouldn't panic about this current down leg. It seems like you have a reasonably decent floor, and it may not make it all the way down to the floor this time and give you a higher low, because it has given you lower highs. So what happens when that happens is people who see the lower highs panic, but they fail to see the floor. And then if you get a higher floor, what you'll actually end up getting is some form of constriction squeeze.
Yep.
And that could be a winding up of volatility constriction, in other words, a calming. And you've got to remember, you smashed it out of this rising wedge that you can just see the final tail of it. And we actually drew a wedge within the wedge with those 3 lines as well. And that was a high volatility event. This is all very high volatility when you ran up there. And then that was high volatility, the smackdown. So you actually got a surge and then a proper slap in the face. So it's a bit like you took 3 tequilas and then some stranger didn't like your face and spanked you through the face. It's got a bit weird suddenly. You know, you had an adrenaline, you thought you were the best dancer, and the more you drank, the more you knew. And then suddenly someone gave you a hard, firm slap in the face. So it's all got a bit weird. You're trying to decompress and calm down. You got into the men's room, slapped some cold water, had a sip of water, and let's breathe deep. Am I getting beaten up here, or am I the king of the world, or what's happening? So in essence, that parable is that I'm giving you, which is pretty New Year's Eve-ish for someone who doesn't think much. Be careful out there, guys. A possibility, my default opinion as one of many possibilities, but often the more probable one, is that we're going to get a volatility compression because you've just had an expansion. It's a bit like the tide. You know, if the tide's going out and I showed up on the beach and said, Rupert, the next stage is the tide comes back in, you wouldn't give me an Oscar for being the smartest man in the world. Well, I'm essentially saying something quite simple here as well. You've had an explosion in volatility and it dissipates. It's like a tide. It gets expansive and then it calms the hell down. So the volatility I would expect to compress. How do we be wrong? And there are other options that can occur. And you always need to ask this question. How do we be wrong? You keep coming down and you lean heavy and you stay in the soft floor a lot longer. That shows you is actually real heaviness. It's looking for the trapdoor and there's not much bounce back ability. So then you pivot from that possibility into a different possible option, which could see you get something more like a descending triangle, where the pressure is only coming across the top and you start to have more heaviness time. Then I will just as quickly say we're going to surrender this floor. But it remains to be seen if that's going to happen. If you lean and then you chop and 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 you hang and you stay quite a long time on the 40.5, and then you have a really weak ass rising wedge like that, I'm going to say, you know what, guys, there is a volatility compression, but it's all on one side.
Yes.
This guy's tapping on the floorboards and he's looking for the hatch into the basement. He's not looking to get into the ceiling anymore. And that's one example of a couple that I can give you that would have me revise my current viewpoint. And that would mean the 42.5 was a great takeoff point as a target for reduction of size, which most of our community will have done. And then, you know, you'll be glad to be buying back lower down if it does go down. So there's no bad price behavior. There's just a bad position for the price behavior you assumed and got wrong. You know, a pullback will lead to a bigger windup, a bigger target to the next upside. It is what it is. So it's either going to be a small pattern, smallish on this time frame, compress and go again, and that'll be enough to get maybe to the next key level, 45, 47.5, or it has a deeper pullback and you get potentially higher projections later to the upside. But if you're long, it feels like a bad market. If you're closed at 42.5, any leverage and the rest is investment that you're happy to just let, you know, bounce around, you're in a bull market, You're not upset. You take your profits that you got at 42.5 and you're buying 36,000 Bitcoin again for the next run up, or 38,000, or whatever it does to the downside. So the whole point is, it's more about, there's no bad markets. There's just bad positioning for the markets you were given. And that's because you didn't read them correctly. And you're listening to bad technical analysis, or people that are just having a clue, but want to talk like they know what they're doing. Because everybody needs mood music. People don't like, and the crazy thing with price behavior, Rupert, and this is a psychological thing, is that people want to understand why something did something. And I refer to the psychological need as toe tagging. If the pound suddenly collapses and you've got a UK audience, what happened to the pound? Oh, no, it was because this trade deal fell through and that, whatever narrative, and it can be utter BS. They go, oh, okay, that's why it happened. And then they'll repeat at the pub. It's almost like once you've been given the reason, it's kind of deals with a lot of the trauma, the mental cognizance. You know, you can't have something happen for which there hasn't been a tag applied to it. And it's the same for crypto. It's the same. It's a mental need for tag. I refer to it as toe tagging. You can't have dead bodies lying all over the place. If I saw a dead man on the way to work on it. Who was it? What happened? You know, we all want to know. And then they go, no, it was a homeless guy, and he had a seizure in the end, and he was smelling of booze, and his name was John Doe, and they loaded him up, and he's gone. Okay, everyone does. Nobody thinks of the dead guy anymore. They got the story, they got given their narrative. It's still a tragedy. He's still dead, but no one cares anymore. It was like, but before that, they think, because we're projecting ourselves in that. We're saying that could be us. You know, why did it happen? That's why. And it's kind of, that's one of the reasons why, maybe. And this is what people need here. So they need people who just say, everything's going to be fine, even when they're wrong. People want to be lied to, just to feel less concerned. Because they'll look at that chart and they feel, that don't feel right. Instinctively, many people actually have a reasonable hunch that don't look right. They don't feel right. And they need someone just to sweetly lie to them. Everything's going to be fine. Bitcoin to $1 million at the end of the year. Woohoo! Okay, we're still on the bull train. Great. I'll crack on. And then it pulls right back down. He's still got a leverage position on and he gets wiped out. Unfortunately, if you want mood music to make you feel okay, the uncomfortable feelings are your friend. The uncomfortable feelings are your friend. The make nice chitty chat speak that tell you what you want to hear, don't hear. And I will always tell people what they hear. And the people, sometimes I get people that just say, I really didn't like you and I didn't like your message, but then you turned out accurate on 6 or 7 out of 10 of those. And I realized I need to start listening to you. So they'll never like you. And I'm not here to be liked necessarily, but I'll tell you my best guess of what's happening. And I'll still be wrong on occasion, but maybe less wrong than some of the others. And that hopefully will help. So Bitcoin question, but I hope it was useful.
No, it definitely was. I think, you know, getting the trend is your friend. People try and go against that for preconceived notions. You know, maybe they didn't get in, maybe they're. I think that takeaway that you brought up about there's no bad markets, but there's bad positions. And you need to, you know, if you look at what we are as human beings, we're just a synthesis. Well, it's a really complex subject, what we are as human beings, but in terms of our personality and how we perceive things, it's all come from predominantly past experiences. You know, we synthesize life as we go through it. And actually, this is the reason why we're often our own worst enemies, because we take preconceived notions into things rather than looking at what we've got in front of us and dealing with it. And this is an approach that I've definitely learned from you. You've got to be fluid with the markets. Our channel name is All In Crypto. And in 2022, we had to come out and say, we are all out of crypto. We don't want to be in this market right now because of what we're seeing. And I think that that's important for people to take away with them is, you know, you need to be fluid with the markets. We often get accused of flip-flopping. There is nothing wrong with flip-flopping, I'm afraid. It's what we should do, you know? So, and
exactly. As new information comes in, assimilate the information and adjust your conclusions. Oh, how could you? Oh, what a terrible thing to be doing. You know, it's like, oh, okay, sorry, this game isn't for you, friend, if that's what you think. That's just by the by, before we leave Bitcoin and the patterns, there's another smaller subplot around the 43.2 level, which served as a kind of neckline for an M on the blow off top, a little bit of a higher version, and also a neckline for a W here. Now you say, is the W still valid with the price behavior going down here? Yes, it can bounce halfway down and it can be a tiny shoulder. We talk about the micro shoulders on complex W bottoms. So we do quite a detailed breakdown on pattern analysis you won't read in any textbook, because I haven't written the book. That's the reason why you won't. And no one else has covered it. But complex head and shoulders is part of it, and they roll W bottoms and how they morph into that. And so you kind of had a little bit of, and I went a bit silly. I drew a really fat Koki there. But just to redraw it for everybody, you can see the support at the smaller point did still have high, marginally higher high. It wasn't perfect. You went marginally higher there, then down, and then down. So there's your little M in that level, and that level turned into a resistance level. So for those that want to be watching for what resistance, just from what I've got you, if you're watching this video and you're one of followers, first of all, well done for following a smart guy who has a sincere attempt to try help you build wealth in the crypto markets. You should automatically be going and doing the following thing, what I'm going to be saying to you, because he hears it from me regularly. But if you should be going straight in here and putting alerts. Whoops, I'm drawing lines. Forgive me. Let me just take that off. You'd be putting alerts at these levels that I've been giving you. When Bitcoin next runs that, I suspect it'll be breaking this minor key level of significance, which was a small M neckline. So we're on a much smaller time frame. Everything's significance comes slightly lower when you go off a 3-day or a weekly chart to a 4-hour, but it's still a good time frame. I'm not sitting you here on a 5-minute tick either. And you should put a warning here for, hey, Francis's primary probability is probably not going to happen. If we run this, his secondary solution option might be more likely the descending triangle. So you can see we're capable of maintaining multiple pattern framings of the same price behavior. I've drawn different things here in front of you, in pink, in orange, in everything, to see them pop. And we watch what it's going to be. The market will choose one of the templates and it will revert. There's only a certain number of ways of things go down and up. And once you know, typically from watching lots of it, you know, you just apply the right cookie cutter. We're making cookies here, and it's the star, or it's the cat, or it's the witch on the broomstick. And you just choose it, and then you put it in your mix, your cookie mix, and you cut out the right shaped cookie. And that's essentially what we're doing. So you're in a couple of key levels. Most of what we do is key levels, or horizontal, and then pattern based, because they have consistency. So you will note, I will look at volume. I'll look at volume by price. In fact, that's something fun to do we haven't done, and this is an extra little value. I tend to only save these premium community, but I'll throw this in for you. You were talking about a Christmas gift for your
fantastic
guys.
Brilliant.
So if we do a piece of price analysis here on Bitcoin for the recent history since breaking the target. So you broke on that candle. So that's why. So the other thing, people do fixed price by volume by price incorrectly. Most people are lazy and they just throw it across the whole screen. Well, you're just getting massive overbearing bars, horizontal bars, on price behavior you're no longer interested in. We're looking at something and saying, is this topping or is it continuation? And where is the bulk of the volume occurring? Is it banging on the floor? Is it banging on the ceiling, or chunky in the mid-lower region? And I would probably say it's pretty chunky, just below the halfway mark of the 42.5. Yep. There's your 42.5. You actually had quite a high histo over here, but because you have a 70% rule and the biggest histo was over here, you cluster a 70% there. But I will just prove that there was a reasonable amount of volume here. That histo ended there. It would make it the second largest one, or possibly tie with that one. So you've got, I call them the ladies. She's quite big in the bust line area, but she's also potentially holding your child as well. So I don't know what you've been up to, but that's a typical volume by price where you sometimes get two key levels at the bread. So this is not so much the burger patty, it's along the bread long. So this one is across the top of the soft floor, a little bit higher than the soft floor. So you start getting knocked back when you start approaching the soft floor. It accumulates there, and you start getting distributed when you're up top here in the upper half, the bread of the bun, you know, when I did the squares for you. Yep. So it's quite interesting. Sometimes it can give you an insight. Now, had it been very much like this, In other words, all the big ones were stacked near the bottom or close, something approximating that. You're never going to get diagrammatically a perfect triangle. I would be more concerned for the bear side. The volume is actually quite thin here at the lows. So it's less of a knocking. It's like a nitrogen balloon that's getting a bit flat and it's bouncing on the floor. It's not pushing hard. It's not a lead ball. No one's dropped a kettlebell on the bottom there. It's quite light volume. In fact, it's playing muchly in the range over here. There, as I've highlighted, and a slightly smaller and less significant there. And that's obvious because you didn't visit back up there in these second rebounds. You've fallen below, which is why I drew the other framing, the one before in the orange, I believe it was, which highlights that there's a new key level of significance that's come into town on a small scale, on a small time frame, not with the same as the 42.5, but that level. And you're getting your M there and your W on the other side of it. The W is bigger than the M, and it's running through there. So it's quite an interesting level. So we'll watch how this develops. If you start seeing this bulking up over here and it's bending down and eventually the point of control moves to a bar lower, then we are slowly becoming more the descending triangle. Then my position and my probability meter goes from 55%, the squeeze for an HVF and to go up to and 45, the descending triangle. There's not just two options, by the way, but let's just for simplicity's sake, there is, to being 55 the other way, to the descending triangle and 45. And of course, all the other options that I won't get into here, but you can discuss, are all possibilities. So the other category can be quite broad. So volume by price, inconclusive, but it's just confirming that mostly you've accumulated here. So this has also been a sine wave, and you tend to have a sine wave. You get a lot of this sine waving around key levels. That's your sine wave. So the midpoint is here, and it's very much like sine wave theory. The distance from there to there equals there to there. I can almost assure you. I didn't draw it very nicely. That dips a little bit deeper there, and it's going to probably be the distance from there to there. In the same way I explained the early part of the blow off as being 2K there, and then 2K to the downside around your key levels.
It's amazing how that works out. Yeah.
And this is how price overcomes levels, by the way. So first it reaches to and fails. Then it just runs it and pulls back. I had everyone tell us how useless we were in gold. We should talk about gold, by the way, and silver. For sure. Because we broke the level, and I said that's a key break. And then, of course, it got rejected violently and came back. And you've jinxed it and you were wrong. And no. The November close was a monthly all-time high for gold, and that is highly significant. And the follow-through, the first one, gets rejected. It's okay. There's 5 stages to a breakout. You break a key level, but first you lose that battle, but you thin the stack out on the offer and you get pushed back. But then you get a new staging effort from a higher up place, and the next time you get deeper in, and you still might get what we call the second chance. So we have 5 stages in a breakout. Our theory. Yep. And then the third event is usually what we call the melt up or the capitulation, depending on whether you're long or short. So everything is exactly where it should be with gold. And I'd like to take you there because this has got to do with crypto as well. And
do you know, and when you mention it's to do with crypto, and I'm sure you'll bring us on to this, this is one thing that you highlighted that made a lot of sense to me and has certainly helped me this year positioning the market. Why are we looking at gold? Because there's sort of confluence with markets, and you can look at markets against markets. So it's very interesting that we're about to go over to gold, and some people may go, well, this is a crypto channel. What the hell has gold got to do with anything crypto? First of all, they're all moved essentially by the same thing, which is money. So there's going to be an element of the same sort of thing going into it, and liquidity and everything like that. But more so, you can actually, and I'm sure we could maybe go into it after this, you can actually look at Bitcoin against gold and see if Bitcoin's in an uptrend against gold and gold's going to do well. That kind of gives you a good clue that Bitcoin's likely going to do well also, on top of everything that we've just looked at.
Bitcoin's a higher beta, so it'll do doubly well. And some of the alts that are well positioned could do 10x as well. So, you got to a staging place that's quite a bit higher than the last time. You were above 1972 when you were trading 1932 here. That was the move that gave you that final flag there where you got your melt up. And then you got your slap in the face. You got a bear flag the other way and you came off. But now you built a base higher up. You were also in the falling wedge there that I've drawn for you. And you smashed that wedge. Guess what? Now you've gone from touching and dying at the 2K level to actually building, what do they call it? Base camp to take on Mount Everest above the 2K level. Now you're comfortable and spending a fair amount of time and actually drifting up as we speak in the markets at 2040. You're not hiding on the other side of the border anymore. You're building a base on the enemy's territory to launch fresh attacks higher up. And that is called progress. And you don't get, everybody just wants melt up. When straight line up so that I don't have to think and money can just be thrown at me. Well, I'm afraid if the game were that easy and you were putting it, you need to put more effort into it to be in at those times and to be big at those times responsibly with real money management. You've got a whole bunch of skill sets to develop, including patience amongst them. And this 2K gold, it's coming and it's great news for crypto. We talk about the category as anti-fiats.
Where is gold on a macro? Because a lot of people probably aren't familiar with looking at the gold chart. Gold is coiling up at the moment and has already smashed into new all-time highs and come back, just as everything Francis said, at new all-time highs. Price discovery for gold, which can be rather explosive. I mean, and I'd also like your thought on that. When you don't have the sort of hanging branches above you, in your opinion, does that mean that the price action, and this is something that I learned very early on, and I've always seen it as true, but you might be able to correct me. If you've got not a lot of price action above you, you're likely to do it. The price move that you make when you're in price discovery is going to be a lot more explosive than if you've got a lot of kind of hanging branches that you might bump your head into and previous key levels of significance moving forwards. So does that mean we're looking at potentially something explosive for gold moving forwards?
I do feel that we're going to make the footholds of 3K.
Yeah,
and I think there's a decent chance that all happens this coming year.
Wow.
And I can't tell you when in 2024, but I think it'll have made good progress by mid-year. There's a couple of T's and C's I would attach that were exceptions that could see it not happen. But you can see how you were resisted here. You were resisted here. You resisted here. And the 3 times and each pullback thereafter. And now and I've left the eyes on, it's a bit messy there, so I'll take them off, but I wanted the blue line to pop for you because that's the 2K boundary. And it did something very similar at the 1K boundary. So this is repeat. This is history. I traded that 1K break. I was active in the gold markets during that. And that was quite a long time ago. For some people watching, some guys might still have been at school. And some are 50, 60 years old and they remember this. But that was your 1K break right there. And it came up many times. And in fact, this one has already been longer, I would say. But you had rejection on the 1K here. Again, after a stab above the line, rejection, building a base and squeezing. So if I drop this from the monthly to a weekly, you would actually see that this has got an immense amount of days of squeeze. And then you went. And then you went from 1,000 almost to 2.
Wow.
And there weren't very many bad months in that. Once you broke here, you 1, 2, 3, 4, you had 2, but negative 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. 19 up months, and I think you had 2, 3, 4, 5, 6 down months. 19 up and 6 down out of 25 months. So 2 years and a month, and you're up 19 of them.
Unbelievable. Yeah. It tells you everything.
That's a great time to be long gold. And you're now clustering up on and the longer the resistance until they relent. So the bigger the dam wall, the more pressure it takes.
Yep.
And the higher the dam wall. So the higher and the bigger the dam wall, the more pressure it takes, the longer you wait. But when that dam wall breaks, boy, do you flood that valley. a small one goes quickly, but it's a small amount of water. The pressure on the big one is going, and it's very much like that in technical analysis. So this is going to be big. I think it could get disorderly to the upside.
It does seem like everything's pointing in the right direction as well. And the really interesting thing is, technically, things look very good for gold from a number of different points of view. And also, if you look at what's happening with rates, remember, rates, of course, have a bearing on the markets, but technicals will lead this all the time. I mean, just look at trading the 2-year for the US. You can basically get an indication of where rates are going based on that. You also have this period that we're now in for rates, and Jerome Powell kind of signified this in the last meeting. He's now talking about cuts in 2024, which he hasn't been doing. You now have this period where rates have stopped. Historically, that has been unbelievably bullish since the 2000s. Every time rates have stopped for gold, it's gone on a major run. And actually, every time rates have stopped since 1984, I believe, the S&P's gone on and put in a new all-time high. Most people think rates are bearish for the markets. Actually, if you look at how the equity market has done under rate hikes, historically over the past 40-something years, it's closed higher than when they started upping rates by the time they've ended it. So rates have almost been good for markets, funnily enough. It's not until after the shitstorm arises,
Good points. And it's because if the market is taking the rate rises, it's showing its strength. And when it suddenly needs cuts, it's showing its weakness. And the markets sell on perceived weakness of the economy, not the strength. So as long as they think it's strong enough to take the rates and it's surviving, it's almost like me putting loads on a donkey and it keeps showing that it can carry it. It's a strong donkey. It's when it falls to its knees that everybody goes, damn, quick, take the weight off. So it's kind of, how do you break it? That's literally is they go from one expansion to breaking it and then pumping it back up and then breaking it again. And that is their pain meter, the pain feel good factor meter. You're one to the other. This fella is really interesting. It's on a monthly. I will drop it down, but it's gold silver ratio. A lot of alerts around it. Forgive me. Those are just black lines there. You should just about make the chart out as well. As I drop down to the lower time frame, you'll probably appreciate that you've got a sustained holding pen on the gold silver ratio, and it's almost a flag. You've had a big sell-off there. You had a secondary sell-off off that rally there. And we've said, and we continue to say, the gold silver ratio breaking to the downside is going to be a big event, both for crypto and for silver particularly, but gold as well. And that's going to potentially trigger a real pattern. By the way, where I am here, this may not make sense around the world, but we've got power company that doesn't produce power on a consistent basis, for which many parts of the country are facing load shedding.
Yep.
Everyone with any means is securing solar panels to be state-based reliance. And that's most people that are in my peer group are 100% off-grid for solar panels. Their roofs are all paneled up. This is new development. Eskom provided very, very efficiently, very cheap energy and used to be one of the best power companies for most of my childhood into young adulthood. And now it's been managed into the ground. That is the solar panels going up around here, and silver as part of that. I mean, it's the most conductive metal, literally, you're talking about it. It gets pulled out at a ratio of about 8 ounces for every ounce of gold, and it's priced at 85 ounces to buy 1 ounce of gold. So just think about that inbuilt 10x going on almost an 11x that I've talked about, that actually was at one point 126x or 128. Call me a liar one way or another. 128.69, almost 129. You need 129. Think of those tubes that have 20 in a bag of silver. You would need 1, 2, 3, 4, 5. You got 100, and then you need another one, and then a half of another one to get a single ounce. Have you felt an ounce of gold? It's a tiny coin. It's smaller than the silver. And you're pulling them out at 8 to 1. So Silver in the big boom going to do well, but why do crypto people care? They think tokens will go up faster. Okay, fine. Just be aware that the breakdown of this technically will be a major bonus for anti-fiat, which will be monetary perceived metals and digital money, ergo the crypto sphere and space.
Wow. Yeah. I love that how you've derived that. You know, if gold's going to do well and this and silver's set to outperform gold, i.e., this chart breaks to the downside, that means gold's going to do well, silver's going to do even better, and there's going to be confluence with the crypto space. Do semiconductors
cryptos will do as well as silver and maybe a bit beyond? So that's the news the listeners want to hear, but I also want to help them understand things. And this is not typical price behavior, this. In terms of the relative valuation, you got one little spike out there. This is not typical. You've seen what this did. That's 2011. You know what happened to metals, 1900 for gold.
Yep.
And silver went to the $45, $50 range. And you know what happened to silver here, it traded down at 11. And the gold silver ratio super spiked here. And that's when central banks bought gold. Central banks don't buy silver because it takes too much storage space. They need as much wealth in a tighter place. So this is the beginning of the move for the metals. It starts in the God market gold, and it's driven by institutions that know the garbage that they are driving with the debt market, that they've got a proliferation of debt as far as the eye to see to come down the chute. It's hopelessly overvalued because there's tons of it around. I use my marshmallow analogy. You know, you might like one marshmallow on your dessert, but if I just put these massive pipes through your windows and through your chimneys and fill your bathroom so that your toilet's full with them, you can't walk to your room, you're squeezing them out the way. And then I say, how much will you pay me for another 3 tons of marshmallows? You're going to go, I won't pay you anything. In fact, I'll pay you to take the 3 tons you've already stuffed in my house that are making everything sticky and I can't fit in my fridge or cupboards away because I can't even move around in my own house. So that's debt. Debt is the, you know, the stuff debt. So that it doesn't have value. And the big thing that I feel I need to make so many people aware of, and I keep repeating this analogy and it's short and sharp, but it's so important for understanding debt markets. And people don't realize, why do I have to care? I'm a crypto guy. Why do I have to care about debt markets? So what? It's going to go to zero. Whatever. If you want to understand when your crypto may pump really, really hard, you need to understand when the debt markets will dump, because the key thing is that the debt markets are the Jupiter and your little token is the beach ball sitting next to it, only you can't see it with a telescope. And what has to happen is Jupiter needs to deflate right the way down, but all the legacy families aren't happy that all their assets are going to lose valuation. Simultaneously, they're going to hyperinflate the beach ball to be the new system so that you're going to get off the old donkey that's dying under the weight. You're going to get off the old iron horse train. You're going to jump onto the monorail train. But the trick is going to happen is all those going over are going to end up losing all their suitcases, which is your stuff and your assets on the old train, the old donkey. And you're just going to get teleported barely buck naked with the shirt on your back to the new monorail and told how it's going to be with an intercom voice and an AI robot. And that whole process, you have to avoid being stripped of your net worth during that period. And digitized things, you know, have vulnerabilities as well.
Of course.
Gold has vulnerabilities as well. I'm not being a gold pusher or a crypto pusher. They both have use cases. Have a stable of horses. I have multiple motorcycles. If I go on sand, I have a 501. It's light and it goes and it chucks and I tour great, but it vibrates like hell at high speeds. If I'm going from Cape Town to Plettenberg Bay, 6 hours, I have a 901, which is a adventure bike, which is higher ride position, more comfort, fatter seat, bigger top end, doesn't shake as much. And then when you want to go, you know, Harley Davidson, easy rider and comfort, you have a Harley. So, I mean, there's all kinds of riding, there's all kinds of bikes. And the notion is everybody just has to be mono. Everybody's mono or binary. You know, it's on or off. I like this or I hate that. You got to be love something or hate something. There's so many places in between. There's a very useful tool. There's always a useful tool in all things. So you need a toolbox. You don't have one tool in your toolbox, do you? If
No.
you take a toolbox, you you just don't have one tool. So don't be a tool, have many tools, is my message to you. And one of them is, when you need a shifting spanner, the hammer don't work. So there you go.
It's very interesting. You mentioned this concept of the beach ball and Jupiter years ago, and you were one of the first people to help me understand likely what the reset that Klaus Schwab and people like that are now using, but you've been speaking about for a while. It is the failing of the debt system, and debt. If you understand money, it is debt. That's the system we live in currently is a debt-backed system, and the failing of that is the failing of money itself. That has to go. That value has to go somewhere.
Is when the people are so impatient and they say "when moon," as is the famous cliche for crypto things. Is I say you shouldn't be wishing for the moon, because the process of when moon is the process where you're about to lose all your money in the bank. The debt markets are collapsing. Your statists are running all sorts of geopolitical tricks to distract you, which could involve wars, conscription, loss of jobs, ergo the events of March 2020, which I won't name, all sorts of horrible stuff. And they're going to be collapsing the debt markets to hyper pump the alternative markets. And I do think you're going to have a vicious seesaw where you have one asset category dump and the other category absolutely surge. And it's going to be a sudden realization that one form of money no longer exists. Now, if you want it that day, let me tell you, I don't think there's going to be many happy people around in that day. And even if you are in the exact right token and you're pumping there, you're going to be losing somewhere else unless you don't have anything to your name. No physical assets, no credit cards, no bank accounts, no savings accounts. All your money is all just in crypto and you're in the right token, and that there's no power gridage downs. There's no mobile phone takedowns. There's no rinsing of all the exchanges and saying, well, it happened. Guess what? There's a CBDC now. There is a possibility that the thing that moons will be the CBDC. And they'll say, listen, all of this crypto game we're playing is just an on-ramp. It's a training tool to get you all CBDC wise, and like a part of a rocket that you just dump once you've got a certain orbit, the whole thing goes. Now, I ain't saying that super seriously, but it's a possibility. People don't like to think about possibilities that make them uncomfortable. Why would a CBDC want to compete with Bitcoin? Who's going to hold the CBDC? I will dump all my CBDC for Bitcoin if it's scarce, because I know they'll proliferate. That's what they do. And everybody knows they proliferate. What do you think is going to happen?
And who's in charge
of CBDC? I'm dumping it for Bitcoin or gold or silver or a house, even a motorbike, another one, rather than hold it. I mean, they're going to taper it. They're going to say, use it or lose it. When there's not enough demand in the economy, then they're going to say you're spending it too quick. And then they say you can't buy steak because you've cow farts, all of this stuff. So, I mean, who's keeping the CBDC?
Yeah,
it's going to be the most proliferated and So will they allow all of these to exist? Everybody assumes so. The problem when the masses all assume something, that's where you get hit. I've learned long ago, the majority are always wrong.
Yes.
Always wrong. They're always wrong. The common thought of the masses is that Bitcoin doesn't ever stop going up. It's eventually all its coins are virtually technical, all the supply is out, and it just goes hypervaluation and all of that. I've learned that the majority opinion is usually wrong. That doesn't mean it has to be wrong. It just means there's going to be a more twist in this. What happens?
For sure.
I think the Satoshi wallet is held by the families. If it is, it's good for Bitcoin because they won't take it to naught.
Do you know?
Or they'll take it down to shove people out to own it all. They'll be okay with dumping the value. They don't care about short-term valuations. They play the long game. But it means it survives if it's statist owned, the families that own the banks, that own Vanguard, or that that own State Street and all of BlackRock, the lot of them. So you should hope that the worst people own Bitcoin and are controlling it. And BlackRock will become the manager. Satoshi's gone away. There's such a huge wealth. I was sawing the list of who holds the most of Bitcoin. And of course, the Satoshi wallet is right at the top there. Somebody's going to have to manage it. Who's going to custody this thing? Oh, well, there's new hacking techniques. It's been determined that BlackRock should set up a foundation for the benefit of humanity and greenness and transgenderness and don't forget BlackRock is why all corporations, oil corporations, can't get funding to do new exploration. Mines can't get funding, and you can only do wind farms and things like that. And they're behind all this other stuff. So yeah, we'll custody it, and on behalf of the man, he's never showing up again. Of course he isn't. He never existed. It's theirs. They seeded it. They were the pre-mine. The guys that were the pre-mine.
Do you know, that's the interesting thing? I thought about this actually earlier today. If Bitcoin gets to some of these valuations, and it's going to be technically driven for us in regards to where we look at value in Bitcoin and where we think its value is going to go, not just a guess, but if it gets to some of these valuations, whoever Satoshi is, or they are, will become the richest man in the world. That's an interesting thought. And that kind of makes you think, and the people,
what if they already are the richest men in the world and they transferred their,
and they can pump it,
family wealth in advance as part of this racket, and they're behind everything? Knowing that they're moving to a digitized wealth. Well, probably you're right about the richest man in the world, but it wasn't one man. It's the lines, the family lines,
I think so. And these families have famously said competition is sin. So why they would allow
they want to own most of it. And the few Bitcoin that they don't, they're going to flush you out with excessive leverage offerings and all sorts of things that will have people do stupid stuff and give it all over to them. And then they'll capital gain tax you, then force you to sell it to make your capital gains taxes payments. And then they'll be on the other side picking it up. So the very small segment that they don't own, they'll end up owning. So that's essentially my take. And that's the good story. That's the good news story, because that means Bitcoin survives. If you truly believe the Satoshi narrative, what do you think the families that run all the central banks are going to do with CBDCs and Bitcoin as a competitor that has limited supply, doesn't disappear on you, that can't be inflated away, can't be tapered, can't be confiscated, can't be anything? And why is Bitcoin so transparent that everyone can see on the blockchain ledger? It's perfect for a surveillance society. It's going to be big transaction store of value, and they already own it. That's my take. If they don't, you should be very worried for its existence, because they won't allow competition. You just said it. How many times have I reminded you with that phrase, and you just repeated it? And it's the perfect statement. Competition is sin. They do not allow competition. Absolutely. Ask Colonel Gaddafi and the gold-backed dinar how that idea turned out for him. Ask many others like him before.
No, I'm right there. It's too good to be true. If something's too good to be true, usually it is. And you're right. The masses are. Have they ever been right? I mean, just look at markets and the forecasts for them, often from the masses. There's great charts out there where they look at the general consensus and just how wrong it is in regards to markets moving forwards. And Francis, so you've got a really good overview of not just crypto, the markets generally. Have you got any favorites? Are there any altcoins that you're looking at with a kind of twinkle in your eye? Is there any altcoins or any cryptocurrencies that you're particularly watching along with Bitcoin at this point?
So you have to remember now that we're no longer moralizing about crypto. To me, all the things that are captured and are statist are the things that will pump. So Sol, for example, venture capital, it's going to play some statist role in your future post-crash environment once they dump the debt and bond markets and give everyone haircuts and cancel their pensions and give you UBI in return and tell you that you have to comply, which involves medical interventions and all sorts of things. Just because this isn't the full answer to your question, because I'm not punting Ethereum next, but I am going to say it's going to have a decent run, and it's in a pullback moment at the moment. I think others will go up more, and I'll talk more on that. That'll answer your question. But I just think Ethereum, because of its major cap significance outside of Bitcoin, is worthy of a comment. And it's also going to be status. So most of the things that I expect and most of the big cap things are already status. You're talking about Google, Apple, and Microsoft in the early 90s.
Yes.
This is how I view it. These are statist entities that are data harvesting you. You know, their intention is to collect everything on you. Biometrics, they're all part of a corporate fascism that is working in tandem with government, and humanity is the mark. You are in a war. It's quite clear to me. You're in a financial war. You're also in a biological war. There's a military industrial complex. There's a pharmaceutical industrial complex. There's a narrative and news war. You're in essentially a psyop. You're getting gaslight lit everywhere if you question anything. So I've just drawn an upside HVF that our community has, and I know you're aware of this one. And it's pointing to, and the interesting thing is the pattern's better on the euro. So don't get confused here. If you're a US guy, or even anyone else, because most people know the Bitcoin price in dollars, same as gold, whether they're in America or not.
Yep.
But essentially, we're in a bit of a pullback phase here for Ethereum, but it did break out in our view at 1,772. This is an upside HVF on the euro. The rest is pointing to a target of, you can see the number 3,227.13. Remember, that's euros. So you probably around 10% or 5%, depending where the euro USD is in the future, add on to that for dollars. So we're getting a clear target here. I'd possibly trade it on the euro and make euros just because we trade our best patterns. And that is essentially a first. And the important point on this, for many will go, really, that doesn't sound so wowie, is that this is a first structure in a new trend, and by our laws, it's going to overperform. So we would only do a partial close, and then we have methods by which we would stay in the trade and we would exit it on overperformance criteria, which is, again, part and parcel of our community. You can find out how we do that. And that's an 11.75 risk reward. So I'd love to ask people, how many times have you been in that you've known where your stop is, and your stop represents 1 unit, and the risk is 1, and your reward is almost 12 times that? And most people, having taught at academies, having taught at tradings, are trading less than 1:1. They think they're trading 2:1. That's what they tell you. And when you look at when they close, they're on stops. The stops aren't hard stops. They let the markets fall through them. And when they snatch profits, instead of letting profits run and snatching quick, small losses, they let losses run and snatch quick profits. So that's a classic case of investor and also big, long-term, light leverage traders. So don't be that guy. Do it the other way around. So that's a comment for you on Ethereum. So it's going to do pretty well. We know this, our take on statism. I think they're going to play a role in registering property. Yep. That's physical homes on the blockchain with an NFT, with an instant for sale document where all the documents are lodged. Everyone's going to have a complete package, and you'll literally have your purchased home with all its documentation available. So people will be able to see who owns it. Transparency is going to be the new thing. They're going to call it transparency. It's called lack of privacy. Yes. You'll soon know what each person owns and what they do. And they'll say it's for the good of the system. It's for the good of the system.
It's kind of like we should all stop eating meat. And by the way, I'm a big advocate of the carnivore diet. I've never felt so alive doing that, which is contrary to everything that's brought up and contrary to what I've been brought up with. But it's kind of like that, oh, you shouldn't eat meat because it's doing this, or you shouldn't do this because it's harming the planet in some way. It's a similar kind of thing, isn't it, with this transparency thing? They're trying to
if you've got nothing to hide,
yeah.
That's the typical narrative. I will keep mentioning XRP. It is so the key thing that people must understand with XRP is that it's a drift and spike token. That means it's got a lot of, it tends to have very powerful news events and then nothing for a long, long time.
Do you know, an XRP was something that I didn't dream of putting into my portfolio until you mentioned it and took a technical look at it. And this is a thing about leaving your biases at the door when you're trying to make money. You know, if something technically looks sound, go with that. Don't go, because fundamentally I've heard all these big rumors and stories about XRP for as long as I've been in crypto. You know, it almost seems exaggerated a lot of the times. But now looking at what you've highlighted, I know you've done many YouTubes on this, I'm going with it, you know.
Yeah, we want people, we've given 1 or 2 of our really big ideas away for free on YouTube to try help people get independence. I mean, That is a volatility squeeze. There was a little flush out to the downside. I expect on very light volume. They don't want you to make the money. They want to shake you out. You've got to stay in on this exchange. This is Bitstamp. It's not on all of them. And then you got an absolute surge where you went from 0.004 of a cent right the way up to $3 something. So, I mean, the multiple there is scary.
Unbelievable.
I think you would have had, I think you would have safely had 20 times will take you to a cent. And then you've gone from a cent to $3. So on top of that, another 300. I mean, I don't even know the multiple. It's ridiculous o'clock. I don't think you get that same scale, but it's going to be more than handsome over here. And we've got, so please note also the commonality of structure. I'm just going to basic diagram draw and then a squeeze. And a low boring range where everyone loses patience. So let me just say that again. And let me just draw while I say it. So I am looking at you at the camera, but I'm also drawing eye contact good, but watch this while I'm saying it. And a low range driven for an extended period. A boring low range price behavior period that is just prior to a possible flush out and then rumpy pumpy to the moon. And we've called for 16 points, upper 16s, but to be run on over performance. I think you'll trade 17 on this.
Wow.
Dollars.
Unbelievable. Unbelievable return.
So that's not going to be hundreds, but it's going to be in and around 30 from these current levels, about a 30x. And when we first started talking it down here, it was about 35, then 33, and then 30. So you've had this grounding. And I just want to highlight the similarities. So highlight the similarities. This is why we say it. This is technical. We're not buying into any statist. It's totally, they've gone and snake charmed the serpent itself. That's who they want to serve. But guess what? Most of the others that are going to survive and succeed are going to be delivering your new monorail surveillance finance system. And each one is going to look after certain aspects of one of the pillars of this new system. So you've got to get out of debt because you won't be forgiven your loans, but lots of other things will go bankrupt that will take your money. So it's going to be asymmetric. It's going to be like subprime. The bankers got bailed out. They kept all the $1 million bonuses they made on the upside, but when it all went bad, they got bailed out. Who paid? You paid. All that extra debt, that's now created inflation. That means you pay more for goods. Your money that you've saved and put in other things, that's why it's devalued, all because of the asymmetry. Who they're looking after? They're looking after the people that paid them to be there. Politicians, the whole voting game is a charade. The people that put people in power are the banking system that get them on the TV channels, in the media that they control, talked about, walked about, campaigns, people pushing you. You don't get to choose to vote. You can't vote for Francis for president. See if you can find a place where you can vote for Francis for president. Make me president of America. You won't be able to do it. No, try Ron Paul, a pretty straightforward guy that wanted to bring troops back.
Yep.
He kept campaigning, and he was well liked. No. They wanted him to stop. They wanted, okay, you proved your point. You can stop and go away now, please. You're kind of being a nuisance now. You're getting in the way of our system. It's Mitt Romney, don't you understand? And Obama wins. We've already planned this. Go away. Yeah, you remember that? Okay. So it's the same in the UK. I love my American audience. We're very well supported by the Americans. It's the exact same in the UK. We're very well supported by the UK. It's the exact same in South Africa where I'm sitting. It is the game. So it's not an attack on any nationality. So just watch that. You're getting bored right now. That's good. The action's about to start potentially, and you're falling asleep. You always fall asleep when the best part of the movie is about to come. And that's me warning you. And that's me showing you how it was last time. And that's what technical analysis does. And that's my free Christmas gift to you. And I sincerely hope to be right, because we'll be making money together. We're brothers in arms. I want you to get fat and rich out of it. And, you can join our community anytime. There's many other options. There's one we think will do even more than this that we discuss. And again, most of these coins, you love to hate them. But that's why they're going to win.
Francis, this has gone on for quite a while, and I'm sure me and you could talk for days if we were ever trialed to do so. But absolute alpha there, guys. The reasons that I stated at the start of the video for bringing Francis on I'm sure you've seen throughout this video, you know, this is the man right here when it comes to technical analysis. He's dropped absolute alpha from start to finish. He's even given you a number of Christmas gifts. We've done deep dives into various elements of technical analysis. Francis, thank you very, very much for your time. We're going to leave a link to where you can find yourself on Twitter, all the handles, and also where you can join me in becoming a HVF community member. I don't know if there's anywhere else you want to plug, Francis, but it's been an absolute pleasure.
The YouTube channels, guys, watch the YouTube channels. You might think, who's this guy with his funny glasses and miles away in South Africa? Yeah, I live a good life. I'm a lucky guy. I'm in a lovely place. The sea's right there. I was swimming in the lagoon. I was riding bikes through forests today. You can live a great life, and you owe it to yourself to live your best life. This is my key finishing message to all of you. I want you to win. There's so many people out there that want to entrap you. You're marks for so many systems. Become more circumspect. Don't give your trust away easily. Allow yourself to buy time and feel comfort with somebody and something. Crypto is still rife with scams. It's still rife with lots of potholes. It's higher risk in many ways. Have some gold and silver because of the stability that the system will give you. If you lost everything in crypto, you would still have something foundational you could start again with in your gold and silver. Own it and hold it yourself. But also watch for the cryptos that'll run. I'll be partaking. If we don't get cleared out of this thing, if it doesn't get crisped by CBDCs, which I'm not sure it will, because I think these are going to play a role. So the statism is the reason why they will probably survive and actually flourish. Other equities such as Apple, Microsoft, and many others. So I want to help people build wealth in reset times during a transition period that most people are going to get their t-shirts ripped off their back. So it's a polarizing event that is coming. This is the most important time to be the most focused on your personal finances. Do not carry debt. Interest rate spikes will flush you out. I wanted to cover the bond thing with devaluation of debt means a spike in interest rates. Everyone who's thinking pivots on rates are going to be long and lasting forever, I think you're going to get a spike in actual fact, and people are going to get flushed out of their homes. Cancel your debt, pay it all off, and get into gold and silver, get into the right cryptos, and stay in the game. Do not over leverage. The money will move enough to make you wealthy. The move will make you the money, not the leverage. So you've got to keep it right down. Remember, I just showed you on the chart, they flush you out before it goes in the direction you go. You hate me for the call first, and then afterwards you realize we could have been right. They flush you out to the downside. Same as the guys that came and laughed at us as gold got spanked on the way down. Look where it is now. It's basing. You don't get it all in one go. It's not a straight line market, but eventually there are melt ups and capitulations. Make sure you're not on the capitulation side. Make sure you're on the right melt up side. My goal is to deliver that. Follow our YouTube channels, The Market Sniper, The Crypto Sniper. There's links in all our YouTubes. You can book a call. Follow great people like this gentleman who is sincere and setting out to give you his best. I think he's doing great work. There's others like him, but he's one of the few that are regularly happy to engage with. Truth and sincerity and integrity are the most important thing in attitude right now. Choose that over talent in almost anything. And yeah, that's my life lessons in one long speech. Hope to see you as subscribers on our channels and supporting Group on an ongoing basis.
Thank you very much, Francis. It's been a pleasure.